The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 28th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 33 points, 24,150 is the print. S&P is up 6 points, 0.25%, 2705. NASDAQ 100 up 27 points, 0.4% to the upside. Russell 2000 is flat. It's trading down $1. The semis are flat, trading up 60 cents. Trannies are anything but flat, down 107 points, a little over 1%. 10,224 is the print. Spot volatility index flat. Gold off 450. Silver down 19 cents. Light sweet crude up 64 cents. Trading out at 71.90. Lead the charge here to the upside. The amazing one, Amazon, it's up $29. Madison Square Garden's up $28, 10%. That is a move. AutoZone up 15. Tesla up 11. Tricida, something like that, up $11, 55%. Mercado Libre up 8. To the downside, it is Chipotle. CMG down 35 buckaroonies. Ouch, a stinger. That's 8%. Lear Corp down about $11. McKesson off 8. Booking Holdings off about 8. Walgreens down 6. Stuff to look at. Of course, I want to look at what you want to look at. That means we've got to go to our first request. Our first request coming from Scott. Scott S. Says, I bought some August 23rd puts at $1.18 a few days ago. Can you please give me an analysis on this stock? Oh, this stock is AEO, Abercrombie. Am I saying that correctly? And Fitch. Let's go take, I think that's it. Let's go take a look at it. No, American Eagle Outfitters. Totally dead wrong. American, that would make sense. AEO. Instead of like REO Speedwagon, this would be AEO, American Eagle Outfitters. And the question really is, will AEO ride the storm out? Hey, how do you like that? The integration of that out there. Well, so you've got some puts, and what you'd like to know is, where can this stock head to between now and August? And is that a good move to the downside? So we'll start with the daily time frame chart. Now, in the case of the daily time frame chart, it gapped to the upside June 21st, about 6 million shares out there. Came off that high with similar volume, slightly higher. Then 3 million the next day, 2 million, 3.32. Today you're at about 2 million shares. What is this thing going into? Let me take a look at a weekly chart. The week is almost over, right? So last time this thing moved higher out here, nice wide-ranging bar, was May the 14th, 24 million shares. You're pulling back with with half the volume, maybe slightly more than half the volume. So this pullback, so it makes a high last week. Scott, just want to kind of put this out there. Makes a high with 23 million shares, And this week pulling back with 12.4. We're halfway through Thursday's session out here. So I would say on a long-term basis, this doesn't look really promising to the short side unless we can find some other pattern out there. On the daily basis, the answer is yes. We've got that pattern. Price was moving higher, doing less relative energy. Bearish engulfing takes place on June 23rd. A little gap to the downside. But price is really trading into its daily TAS market profile. Bullish structure. We're right inside there right now. I would say if this closes back above the center line of the box, price will move up to about the 24.35 level. Let's take a look. Let's come back here. So if this closes today or tomorrow, above 23.75, you would anticipate that price is going to make its way, I would say, back to the top of the box. Daily box, 24.51. Doesn't tell me whether it's going to take it out or not, but that's what you would anticipate. From a weekly standpoint, let me see if we change Stevie's his Ninja Trader chart here to a weekly time frame. Whoa, that doesn't look right. Let me see here. I have been having a few problems with my system today. Yeah, that looks much better. You know, on a weekly basis, I don't see anything. In fact, last week's move was with energy, was with strength out there. Price this week just coming back and testing what I used to call Stevie's red line. It's Stevie's red and green line out here, just in the spirit of the holidays, which are way off into the future. But in this case here, I don't have to look at the price oscillator. I know that the weekly price oscillator is above zero. Just by utilizing one line. You'll also see out here, Scott, nothing but red squares. Then I'm not talking about in honor of the FIFA World Cup out there. I'm referring to Stevie's red squares, which show that this thing has nothing but strength, nothing but buyers inside of AEO. That at least is on the weekly time frame. You're going out to August. I'd be looking for some type of weakness, and I just don't see it right now on the weekly time frame out here. So I'd say be careful. Doesn't mean it can't go lower. I just say be careful when it comes to American Eagle Outfitters. All right, hope that helps you out. Let's go take a look at next question comes in from Michael P. And Michael wants to take a look at the WBA, not the NBA, but WBA, and that is Walgreens. So I'm going long. Walgreens calls. What do you think? Bit overdone to the downside. Thank you. So in the case of Walgreens out here, let's take a look at, so you've got the tail of a couple of charts out here. So you're going long Walgreens. And if we take a look at this monthly time frame, maybe that's where, Michael, you and I want to begin. You said you're going long the calls. Didn't say for how long. But let's take a look at Walgreens boots out here. And this is the weekly. I just want to put in the monthly time frame first. See if there's any signal out here of a bottom. You can see that top that it made. Well, a couple of different signals out here. You had a Tom DeMark set up 9 count. That took place right at the high. You had price moving higher, with less relative energy. You had a bearish set of bearish reversal signals. You got an A to B equals CD to the downside that's playing out right now. That looks like this, Michael, as we draw this pattern in. And then we will come back and we'll take a look. And it's past the 1-to-1. So, you know, the truth is, Walgreens, WBA, on a monthly basis, says maybe I want to head to $55.18. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. We're taking a look at Walgreens Boots Alliance Inc. I liked it when it was just called Walgreens. But in either case out here, or any case, or basket case, what we're taking a look at is, for Michael, he's got some calls inside of Walgreens. And the question is this overdone to the downside? Michael, if we go on a daily chart, so we looked at the monthly chart. Monthly chart says, you know what? It's still in the process of completing an A to B equals CD pattern. No bullish reversal signal anywhere in sight, certainly not on a daily basis. When I'm looking right now at the current daily basis, so it says, I want to go to that lower next level in the $55 range. When we take the daily chart, Michael, we come all the way back on the left-hand side. What we're going to see here is on the trading session of August 6, 2014, this equity gap to the downside, no reason why, right? They have not yet made a system where you can click on each day and it pulls up all the news related to, what might have happened with Walgreens or anything else to that matter out there. So that's why you and I, we're just technicians. We look at volume, we look at patterns, we look at candles, la-di-da-di-da. In any event out here, it's 84 million shares to the downside. The top of the swing point, the top of the session, 61.50, the bottom, 57.75. I can see when price was gapping down. If you go even further off to the left, even though there wasn't a big volume move, certainly when you take a look at the candles, you can see that this thing was making, in essence, buyers were moving into this equity. This takes you back into February 2014. That happens to be down in the $55 area. I think that was the monthly A to B equals CD. In other words, that really was a breakout area. And it proved to be a breakout area because we saw the breakdown, never got down to test that level, and then Walgreens just simply took off to the upside out here. Now, fast forward to today, 27 million shares, and we are inside that swing point from back in 2014, the high of 61.50, the low of 57.75. Maybe you're correct in the long term. I don't see it today. I see today Walgreens wanting to go down and test the 57.75 level, maybe the 55 area out there. So from today's candle session, no way for me to call this an exhaustive bottom or anything. I don't have any other pattern associated with this. Price is not moving down and doing it with less relative energy or anything along those lines. So I don't, as it was back here in April low, the low out here in May, and now this thing is moving down with some real conviction behind it. So That's what I see. That's what you asked for. And hopefully that assists you with whatever decision making you are going to make with regard to that. But anyway, thanks so much for writing in. Dave writes in. Dave writes, hello, Steve. Hello, Dave. Could you please take a look at the small caps? I am in fairly heavy TNA at a loss, 3 times the Russell 2000. So let's go take a look at it and take a look at the Russell 2000. I'm just taking a deep breath because I know there's a lot of bears out there. I get emails from each of you that decide to send them to me, and probably you should turn your screens off right now. You're not going to like what I have to say. Actually, what I have to say, what I have to share with you is very pertinent, perhaps to your long or your short positions out there. And that is the following. Now, Dave asked about TNA. Dave, in order for me to really answer the question about TNA, what I need to do is go take a look at the equity futures contract, because I like to see a chart that has basically round-the-clock information on it. I don't give a hoot about the IWM or the Russell 2000 cash indice to make my calls. I did not become the #1 market timer by paying attention to the ETFs out there and the volume in the ETFs and all that stuff, other than the one fact that we know is that the Qs make bottoms with volume. That's the one great thing that I was able to take out of the ETF structures, but I don't make my decisions on that. So you and I, we're going to have to go take a journey, a ride on the reading, and go take a look at the Russell 2000 equity futures contracts. What you're going to notice out here is Stevie's favorite pattern, because what it does is it measures the emotion of the market. And that's really what you and I are. We are a psychologist of the market, even though I probably should be seen as a psychologist as well. But that being said, we're looking at the psychologist in the charts out here. And what you'll notice, normally I don't show the bar charts out here, but in this case, just because I can squeeze more information into it, what I want you to notice is right now today you're going to see several Stevie black diagonal lines that are being drawn. What are those lines out here? Well, if you go back and take a look at the last time we saw at lows inside the Russell 2000, this, by the way, is a 5-hour time frame chart. So not a daily chart. 5-hour time frame chart, but the 5-hour time frame chart is muy bueno. It is very good out here at helping identify tops and bottoms. In this case here, we're taking a look at the bottoms. If you go back to about the 3 o'clock time frame back on April the 2nd, you had the same kind of set of signals that were going on out here. Now there we had a confirmation of a low. Here we do not. Just because this pattern shows up does not mean that a bottom has formed. It means one is trying to form. You can come back here to the lows inside of the Russell 2000 back on March 2nd. You can come up to the highs out here inside the Russell 2000 on March the 13th. This pattern works at tops and bottoms. You want to make sure that you use Stevie's other tools. Some of those are on the chart out here. But it looks like to me, Dave, what the Russell 2000 is trying to do is to form a bottom. It's got some work to go inside the equity futures contract on a 5-hour basis to confirm that. It really needs to get above 1652 or 1656 preferably, which is the bottom of one of its TAS market profile. Doesn't mean that a bottom hasn't formed already today. But this is a time frame chart that I'm looking at out here. Hasn't confirmed. A difference between the pattern that is present. It's just like the A to B equals CD pattern. If you don't know your P's and Q's, if you don't know your bullish and bearish reversal candles, you're going to assume that a 1-to-1 means that it's done. It's not the case. It is not the case at all. Now, along with the Russell 2000 out there, you have friends. And that's what you need when you are fighting a battle. Somebody put in the Tiger's Den that there's a big battle, a cage battle going on between the bulls and the bears. And I think that might have been the other Dave. And it's absolutely right. We're just trying to keep these Daves going out here. But what you like when you are in a battle, you want friends. And you've got friends out there. If we take a look at the ES Mini and we go take a look at a similar time frame chart and similar Stevie patterns out here, you'll see that what the ES Mini on a 5-hour chart is doing is also making that same pattern. Actually, the candle that we're in right now closes at 2 o'clock. It's 125. Right now, price is trading just above Stevie's red line. You close above Stevie's red line, says, hey, you know what? At a minimum in the ES Mini, I'm going to go tag 2739, maybe 2753-ish type area. But what it will do is it will confirm another bottom, just as it did at these other lower low bottoms. In other words, this could be the third higher low bottom utilizing this set of tools, this pattern that is out there. So Dave, not all is lost, and you have more, friends, because the indice that actually is the indice that has the most significant top, because on a daily chart it actually has this type of a top out here, but on the 5-hour basis what we can see is that it too has that same bottoming pattern. Has it meant anything in the past? All you have to do is look at Stevie's charts and say, you know, when that pattern forms, the hair on the back of the neck of the bears stands up. Goes with TFNN. Dave, markets are trying to form a bottom. You'll probably know by the end of today's trading session. Zero.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. So, Dave, just to finish off your question out there, and I'm sorry to hear that you are heavy into the TNA and you've got a loss out there. What's really important for me to share with everybody out there is to just simply understand, you know, what are the current market conditions? What does the battleground actually look like? And that's really what this 4-paneled set of charts helps you to identify. First, it's so important to understand that over the course of the last 131 years, what we have seen on average is a correction somewhere south of 10%, more than 10%, I should say, and less than 20%, utilizing that as a measurement tool. on an average once a year. There have been years such as we didn't have one in 2016. We didn't have one in 2017, a 10% correction. I'm looking at the Dow, the upper left-hand panel. So the market was overdue for a correction. The highs that we had in January to the lows that we've seen were over 10%. We now have our correction. What that correction also established out here very clearly is a consolidation. And in consolidations, it is very hard for bulls, very hard for bears. What you want to become, in essence, at that stage, if you're trying to play the markets, is really a day trader, an intraday trader out there, and try to take the patterns that have worked on larger time frames and bring them down to smaller time frames. We are in a consolidation in the Dow. We are in a consolidation in the S&P 500. We are in a consolidation inside the NDX 100. Last time we had that consolidation, in essence, inside the Dow, it ran from 2013, didn't break out of that consolidation until 2016 in November out there. So consolidations can last a long time. How long is this one going to last? I don't know. But they can be very frustrating. Is it possible that this consolidation is going to break to the downside? Absolutely. It most certainly can. And if it does break to the downside, you have a measured move. It's the equivalent of that square box that I have inside the square to rectangular shaped boxes on my screen out here. Likewise, if it breaks to the upside, you have a measured move to the upside as far as its next price projected level. We are in a consolidation area. It can be very frustrating because people want to have their money put to work and making it, making good bread out there. I mean, that's you work hard for your money. You want your money to work hard for you. Most difficult markets are the consolidations. That's what we're in. We are not in a bear market, period. End of story. At least as far as Stevie is concerned. We are in a consolidation, a chop, chop, fizz, fizz, good for the bulls one day, good for the bears the next day. The 5-hour charts that we're looking at inside the equity futures contract prove just how well it can be as far as we'll call it shorter term type signals that are out here. 10% corrections, they're normal. You can have a couple of them in a year's time. Right now, we've got the one long overdue underneath our belt. Don't mean to belabor this. The Dow basically did this last month. It made a new high in euros, but it did not make a new high in dollars. That is not how markets top. The Dow has not topped. The Dow is going to 30,740. We're in a consolidation. Inside the Russell 2000, there's no consolidation pattern. This thing is still broken out to the upside, giving back some of its gains for sure. And maybe eventually it starts to consolidate. But right now it's still the stronger of them, but it's the one that had the most gains and the reason perhaps why it's giving back the most at this stage out there. So just be careful and make sure you know we're inside a consolidation pattern, and that will help you. The good news is most will tell us that, hey, you've got this trade war stuff going on. And the more that the administration talks about tariffs and this and that, that's just bad news. The reality is, if I had $1 for every event that politicians created to put fear, to make themselves feel like they're valuable so that they can solve a problem, well, then we'd all be gazillionaires out there. This here is just a couple-year look at geopolitical events out there, many of which didn't need to happen, but do anyways. And this is the only way a politician or a group is able to somehow rush in and tell you that they saved you, right? But each of these events, and we're in one of those geopolitical events right now, which is the tariff version. Before that, there was discussions we made the last low here when China started imposing tariffs. There was an issue before when we had budget deals, but then you eventually got the bipartisan deal out there. You had a small little bump when Flynn pled guilty out there. You had a little bump with the Charlottesville event. You had a bump with regard to the North Korean missile. You know, you got a Mueller bump out here. Brexit. Yeah, you know, the China bear market. I mean, yeah, back in 2015, I mean, these are just simply geopolitical events. You look at the chart right now inside the S&P 500, you're seeing a series of higher lows out here. You're really seeing the real consolidation of the S&P 500. Forget about the highs in January. Just simply take a look at the highs in February, the high in March, and now the high in June out there. Each of those highs out here, that basically is your resistance level. And this will get resolved. And the reality is that those folks that think that tariffs are the issue out here, and that's all that people talk about, don't do any kind of international business and don't spend any time taking a look at currency valuations, because that's really what life is all about. It's really about understanding the global flow of cash. So I'm getting off my high horse out here. I don't even ride a horse. If I were to ride a horse, I'd get thrown off of that horse, and I don't want to get thrown off of a horse. In any event out there, let's go. There's no other requests out here. Quiet in the den. But let's go take a look at some things that are moving to the upside, moving to the downside. Let's start with the downside. Let's go take a look at Chipotle. And with regard to Chipotle out here, this thing is moving lower. No idea what the news is. Volume behind the move is about 1.5 million shares. Let me turn off this other panel on my chart out here. No reason for that to be on. There we go. So Chipotle completed at this stage here 1 to 1.618, A to B equals CD. It's pulled back today. Volume is about 1.5 million shares. It's pulling back, it looks like, on light volume. There was a 7 million share breakout on the trading session of April 26th. So what this is doing as we speak right now, it's coming back to its breakout area. Now, we don't know whether the breakout area is 386.11 or 342.01. Actually, we know where the breakout area was. It was at the 342.01-ish type area. Here's what you need to know about the chart on Chipotle. Look at that island bottom out here. You always want to look for those island bottoms and those island tops, especially in individual equities. Inside the indices, or the ETFs, that could just simply be a result of overnight trading and so forth. But you see it in an equity, it has a whole different thing. And Chipotle sure made a nice little island bottom out here. No island top or anything. Price just simply pulling back into a sign of strength, doing it on light volume out there. No idea what the news is. Chipotle might be a buy at the 386.11 area. And that's a equity that is the moving to the downside, the biggest dollar-wise mover. Let's go take a look at Lear Corp out here, LEA, down 10 bucks or 5%. That's a wide-ranging bar, no doubt. Volume behind it about 924,000 shares. Last time price was down here, 800,000 shares. So it's moving into a swing point with volume. Looks like this is going to come back and test these lows out here. Maybe it's 171.15. Maybe it's 172.48. That's where she's headed. LEA is the ticker symbol. Dow's up 64. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Jim writes in, he'd like to take a look at gold and the mining sector, GDX specifically out there. So let's take a look at gold, get a feel for what's going on. Now we're taking a look at the current gold contract, August contract. That's the chart charts that are on your screen. You've got 4 different time frames here. You've got a 60 and hourly chart. That's on the left-hand side. Next to it, a 4-hour chart. Next to that, a daily. Next to that, a weekly time frame chart. First, you're going to see that each of the bars are red. Not really a good sign. Second, you're going to see that all bars are below TAS market profiles. Bullish structured 60-minute box. Price is trading below right now, just barely. The bottom of the box is 1250.20. We're at 1250. So still, but still is below. Not a good sign out here. So there's no bottom yet. No bottom in sight. Gold priced in dollars out here. We can see that it's made a measured move, 100% move of a move by getting back to a prior swing point. That takes us back into the December timeframe. Now, Jim, oftentimes, not always, but oftentimes you get to do this measured move. Now, that would be the consolidation, right? If you take a look at gold, that's assuming it doesn't break through it. So gold could be near a bottom at this stage here, priced in dollars. If we just look at that consolidation level out here, we're basically and the consolidation runs from 1370 to about to 1250. So it's a pretty nice consolidation out here. Are we there for sure? I don't know. Do we have a signal that we're there? No. We don't if we take a look at those time frames that we used out there. But, you know, if you're fishing, you're bottom fishing for sure, and I would not throw the hook just yet. The other issue that gold has is that it is falling apart in all major currencies. In other words, the folks that are sitting over in Japan right now, they're not thinking about buying gold. They're thinking about selling. So if you're going to be buying, they're going to be selling. Of course, they're taking a look at gold in their currency. That's really what it matters. Tariff schmariff. You really think the folks over in China, Xi and his foreign guys are that spooked by tariff talk out there? Or is it the old, you know, you look to the right, I'll go to the left. It is a shell game out here. If you haven't been paying attention to the yuan, then you're not. I tell you, the trade deficit, when it's all said and done, depending on what they do with their currency out there, could be even larger. So what our guys talk about on the news, when it's all said and done, it could be larger. Their currency continues to weaken. It probably will. It'll get up into the 8 area. If we take a look at when the trade talks began at 6 versus 8, that's a substantial depreciation of their currency. If they've got a lower currency, that's good for exporting. Bad for the U.S. if we're trying to export to China out there. And when you take a look at currencies are the thing that rule here. A little tax here and there. Give me a break. Really. You know, the folks over at Harley Davidson, the hog out there, they need some guys who know currency working on their staff out there. They can mitigate a lot of the $2,000 cost that they've got. But that's neither here nor there. But we do need to take a look at things priced in currencies. And in a floating currency market, a fixed tariff rate is really hard to evaluate, impossible to evaluate. But if we take a look at what traders, Jim, are doing in Japan right now, prices broken down below a swing point. And those guys and gals out there, they are not buying. In fact, they're looking at selling. They're looking at an A to B equals CD to the downside. I don't have that tool up here on my screen, but you can see it, and it's going further south. Don't be buying gold in yen based upon the daily time frame chart. In dollars, you can see, too, it's pushing lower. Inside of euros out here, it's got your good old-fashioned consolidation between about 1,142 euros to about 1067. Hasn't broken down there. But the whole point is that gold's not going to get any traction until the intrinsic value starts moving higher in at least these four major currencies: dollars, euros, yen, and pounds. So could gold be making a bottom here in dollars? We know when we took a look at what it was doing on a weekly basis, you know, it was moving back there. You know, that 5-hour chart we were looking at inside of the Russell 2000, the Dow Equity Futures Contract, the ES, the NQ. We take a look at the 5-hour time frame chart for gold. It, too, is pushing lower, doing less relative energy out here. But it just hasn't had any follow through. The last 5-hour chart that ended, or 5-hour bar that ended 9 o'clock, did have a nice bullish piercing candle, but it has had no follow through. But it does signal to us it is trying to bottom out here. How would you know? You'd see it close above 1265 would be the number I'm using right now. You're trading at 1249. But even then, you may not get much traction out there because you've got to get gold pricing those other currencies moving higher. If we take a look at the GDX now and just trade the two things separately, well, in the case of the GDX, nothing like a good old-fashioned consolidation. And there you have it. It's got lower to go. And if gold priced in dollars and gold priced in yen and gold priced in euros and gold priced in pound sterling, probably the GDX is going to head lower. But nothing more than just to the bottom of the consolidation, most likely. The bottom of that consolidation, 2117. You're at 2188 right now. I don't know where you're at in your position. But if you are above 2117, I just sit tight. You're in an old-fashioned consolidation. And consolidation patterns, basically, can I use that word? Rhyme. You know what I was going to say. You can fill it in. They're no fun. Consolidations are no fun. If anything, you buy it at the bottom, you sell it at the top, and then you go ahead and you play the momentum move above or below the consolidation area. So the GDX just simply not really that interesting, and we have no signals inside of gold to say that this is going to change really any time soon. So I hope that helps you out with regard to what gold is doing. Let's take a look at some things that are moving to the upside. We looked at some things, some individual equities moving to the downside. Amazon, let's take a look at Amazon. Trading up $32, almost 2% out there. So I guess Amazon is up, supposedly. It is up, certainly, on the news of buying a drugstore. I know that David White was telling me that they bought a drugstore or pharmacy or an online or something along those lines out there. You know, so Amazon just simply rules the world out here. Let's put on some market profiles. Let's go see what Amazon is doing, AMZN. Take a look at daily, weekly, monthly set of market profiles out here. And Amazon looks like to me it's got a confirmed, is it confirmed? A to B equals CD to the upside. It's trying to finish off at a minimum. 2038 is the target. Now, the B point of the A to B equals CD was March 12, 2018, 25 million shares, and it was passed with 20 million. So lighter volume, but nonetheless, price is above the weekly top of its box, 1638. So far, that's really been the test this week of price. Old resistance, that's what it was. New support, that's what it is. Till you see price pierce down below that, looks like Amazon wants to run higher. How high? 2038.67 out there. At least that's what the weekly time frame chart is communicating to you and I. Let's go see what else is moving out here What else is moving? You've got to the upside, you've got Madison Square Garden, MSG. Now, MSG, you know, if you eat at a Chinese food restaurant, there's no MSG there. Madison Square Garden, big volume to the upside. It's at its all-time highs. Is it going higher? Is that the question? Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So our last question of the day, or appears to be, comes from Tim M. Tim writes in, Steve, Tim, I have a small position in SPXL. Any sign that we might be close to a decent bounce up? Have the best of days. Well, you have the best of days as well. Tim, it's 6 minutes to go. Less than 6 minutes, 5 minutes, and about, well, just wait. I'll just wait 8 more seconds and we'll be at 5 minutes to go. And why is 5 minutes important? 5 minutes is important because if we take a look at the ES Mini, the 5-hour time frame chart, as we look at it right now, yeah, it's about 5 minutes. You can see that prices trading above, in essence, Stevie's red line. That's 27.10, you're 27.13. You'll also notice that the current candle session that we're in is a bullish engulfing bull sash, bullish reversal signal, just as price was stretched to the downside out here. So what I can tell you is as of 1:55 in the afternoon, is there a sign that we might be close to a decent bounce? this is your sign. You asked, we deliver. However, price needs to close above Stevie's red line. Doesn't have to, but that would be better. So this next 4 or 5 minutes is going to be fingernail biting time out there. But if you close above that, and then coming into the famous Who song 515, you see some follow through to the upside, you will have your answer. And the next bottom is in. Where it takes us to, I don't know. 2753 would be initial decent target. It could be more than that. All that price has done this week so far is come back and test support. That's the weekly level. That's the weekly top of its box out there. So, Tim, it looks like you might be on to something. Just look for follow through coming into 515. Selling back off and making new lows says you've got to wait a little bit longer. But as we speak right now, 156 as we're going off the air, you have your sign. Folks, thanks so much for being here. I've got another sign. Stay tuned because the best is yet to come. Your favorite polar bear, my favorite polar bear, Coca-Cola's favorite polar bear, David White. He's up next. Tom O'Brien to take us home from 3 to 5. I'll be back with you on Fabulous Fantastic Friday. Thanks for being here. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.